What are your thoughts on creative financing strategies, and are you seeing any changes and maybe an uptick or maybe a decline in those kind of strategies to make deals work in this market?
No, I'm actually seeing more creative seller financing. I don't know if it's because it's the era of creative seller financing or because the information is more readily available now than it ever was before. You know what I mean? If you go back into the 90s, people didn't know about lease options as much as or sub twos or any of that stuff, wholesaling, novations, like all these strategies were around for a long time, but it's kind of hidden behind a vault of some sort, or you had to be part of an echelon of fancy investors to understand these strategies, or maybe go to a very fancy seminar that costs quite a bit to understand that stuff. So either it's because of you know the possibility of low equity right around the corner, the possibility of homeowners not wanting to let go of their property right now, and they want a higher price than a 70% to the dollar offer. Maybe all these factors, but I like to believe it's not just one thing that's causing an increase in creative seller financing. I think it's homeowners that want full price, not trying to get that cash offer. They know what their houses are worth, and so they're trying to get that max offer. Some of them are willing to wait, to get that amount. Again, it could be the social media, could be internet teaching people these new strategies. That way, they go from just that one trick pony to becoming a real estate professional, just like your team. I mean, when you said that your team are 50-50, realtors and investors, I'm sitting over here thinking that's what the future is going to be. Yeah, I don't think there's going to be realtors and investors anymore in the future. I believe we're going to see a real estate professional, someone who actually can solve all the problems, whether, hey, we can list your house, or hey, maybe, due to the limited time that we have, maybe a cash offer is the best bet right now. Or, what, since you want top dollar, but we can't get it right now, maybe some creative strategy to get you what you want over a period of time might be the best. And so to me, that's what I'm seeing. I think it's just many things coming together, kind of like a perfect storm. But yes, creative seller financing is increasing. Some markets are more acceptant to it, and some markets still kind of voodoo or taboo, essentially. Like you want to tread lightly or just make sure you're speaking to attorneys, make sure you're dotting your I's and crossing your T's properly when you're approaching these types of uh, a little bit more challenging of a strategy.
Yeah, and I mean, there's definitely there's both federal and state laws. You got to make sure you following like lease options in Texas. Like that's how I got started in real estate. And then Texas changed some laws like very early in my. It was like within a year of me starting to invest. I'd already done a lease
Mhm.
option, and like boom, they didn't outlaw it, but they threw a lot of red tape at it.
Right.
Where it's challenging. To do that properly without exposing yourself to quite a bit of risk. But in other states, it's seemed to be pretty open season. Same thing with owners financing disclosures, making sure you're following all the like Dodd-Frank laws and RESPA, or I don't know if RESPA really applies there, but in any case, yeah, that's where working with the real estate attorney helps. Ultimately, it comes down to like liquidity. When liquidity is readily available or more available, and especially easier to access and cheaper to access, like 3% mortgages, then creative financing becomes less desirable. I mean, why wait 10, 20, 30 years when I can just get it all now?
Hmm.
Now, when credit starts to dry up or becomes harder to get or more affordable, creative financing uh, can be attractive alternative options. And this also, it doesn't necessarily have to mean the actual interest rate. It could also, like you mentioned, markets. Primary markets are going to have more liquidity, like Houston, LA, uh, you know, Miami. They're going to have a lot more capital, banks, lenders willing to loan in those. But you go out to secondary or even tertiary markets where typically it's small banks,
Yeah.
very local community banks, or it's owners financing. Very common in the country. Like if you're
Yep.
buying like rural property, owners financing, or you're getting some type of um very specialized loan product.
Yeah.
But
Very valid points.
these are all can be ways that you can actually make deals work even paying full retail.
Yeah.
Like, would you pay full retail for a house where you're getting no equity? I mean, for a lot of investors, they're like, no, why would I do that? Well, what what if they gave it to you for a 30-year interest only mortgage with 36 months of deferred payments?
Hmm.
I mean, does that make sense? I don't know. It might depend on what you want to do with it and the rent rates and all this stuff. But just, I mean, thinking about these things, because
Yeah.
there's probably some people like if you bought your house in the last 18 months, depending on your market, you might be underwater. Not everywhere. Like some markets of like Miami,
Yeah.
they're still chugging along.
Very valid point. I mean, we go back to 2021. I mean, every MLS showing had, 15, 13 cars out front. Most properties that were listed were being bought 5 to 15% over asking price.
Yeah.
Now we're in a market where potentially values are starting to kind of correct, maybe in some markets go down. What we are seeing, our days on market are increasing. So that's probably what's keeping the price where it's at. But something's going to budge. Either these days on market going to keep climbing, eventually expire, or these prices are going to start need to get adjusted to where the demand is going to be. And so that I think is a very, very, very bring good valid point. Like just the fact that you're mentioning that, I think these are just going to be some things to start considering
Yeah.
and in
And,
your article.
if you're in something other than single family, owners financing, creative financing is very common. Self
Yeah,
storage, mobile home parks, small multifamily. It's very common, but just ultimately don't be afraid to ask because this is the market to where getting in may seem hard, but it's actually easier because there's a lot of more institutional or bigger players, or folks that have been in the game for a while. Where things aren't working the way that it used to for them. And it's a little harder for you to adjust a big ship.
yeah,
But a smaller
absolutely.
player can come in, and if they can learn these creative strategies, they can get in and and get some deals done when there's less competition.
Yeah. Actually, here's a great example. I'll keep the name secret, but in 2021, again, when everyone was paying a little over asking pricing, a really good friend of mine, an investor, was looking for military homes, military personnel areas. And the reason for that is, a lot of these guys travel from state to state because of training or, where they're being relocated to. And so what he discovered is that most of them, needed the house right away. And so they were willing to pay that 5 to 15% over asking price. Well, a few years have gone out. Now they're being relocated or they're being deployed somewhere and they need to sell. But to your point, Chris, the equity is not there because of the fact that they paid over asking price,
Yeah.
right? And so we're starting to see a lot of people do creative stuff with the military folks
Yeah.
because again, they're not trying to break even, right? While they're out and about, they rely on professionals like you guys to fill in that void,
Yeah.
right? Make sure
And,
that property has that tenant cash flowing, and then
yeah.
over a period of a year or two, when the equity is now there, you're able to list that property on their behalf,
Yeah.
and you made this
And,
person who's sacrificing a profit,
yeah.
So
And it's my understanding that VA loans are assumable.
absolutely. So, and
So
that,
how would you
that
like
is
to
one of the
assume a
filters you
30%
can use in
mortgage?
PropStream. So if you guys want to search for VA loans, we got you covered.
Yeah. There's really a massive opportunity right now with the government created this window of basically 2 years or 18 months. But if you want to go back and even up to 4% interest rates the last 3 or 4 years. So you've got between 3 and 4, or 3 and 4.5% interest rates. That debt is gold. Because if you can control that debt, and by control it, I mean whether you're doing some type of creative lease option or owner's finance, subject to being the big one,
Yeah.
a loan assumption, that gives you a ton of value because you can do things with that property that you just cannot do with a 7% mortgage unless you want to put a 50% down payment. It just doesn't work.
Yeah, you nailed it on the head. And those are some filters of ours. You can search by interest rate, you can search by the loan type. Chris gave you guys some really good hints. You did catch on to that. But yeah, I mean, identifying those owners with low interest rates with assumable loans, control that, and cash is going to flow in everybody's pocket at the end of the day. The owner's going to cash flow. You're going to be able to make your profit, and you're going to make someone happy because they're going to be able to afford a property that they may not have afford traditionally with a bank. So it all, to me, it's a win-win-win situation at the end of the day.
100%.